You're watching Net Worth. With the festive season around the corner, everybody is hoping for a possible price correction in the property market. Anumeet Kaur Bisen now joins us to give us an insight into what to expect. Anumeet, what is the sense in the market right now? Will it bring cheer?
Well, Vivek, difficult to say if it would bring cheer to the developers really. But as far as buyers are concerned, there are definitely good times ahead. Yes, interest rates have been rising and property prices have been way too high. Apartments in prime areas in cities like Mumbai and Delhi still sell for prices as high as 50 to 60,000 rupees a square foot. And to top it all, developers have been sitting on these prices so as not to give out a weak signal. But one thing is for sure, Vivek, this Diwali will certainly bring a lot of freebies and discounts for the buyers, which can't really make up for the high prices, but that experts say is the only way developers can lure buyers right now. In fact, the Maharashtra Chamber of Housing and Industry has asked its members to cut their profits by paying the stamp duty and share the interest rate burden with the customers. Mumbai-based Oberoi Constructions too is planning to launch 2 projects around Diwali in Goregaon and Mulund at prices almost 50% lower than the ongoing market price. While Parasnath developers sources say is soon going to launch offers such as EMI concessions and discounts on booking amount. Orbit Corporation too has already reduced the prices of some of its projects by 15 to 20% compared to last year.
At Orbit, we are making the nanos of the world with 600 square feet inner city developments up to 1600 square feet 3-bedroom apartments. So therefore, considering the size, the reduction, we do expect a good offtake this Diwali.
Also, Vivek, sales increased by about 10 to 15% around Diwali. So it's no surprise then that despite the slowdown in the market, developers are still optimistic. Experts, however, say it's actually post-Diwali that the picture will be more clear.
Post-Diwali, I'm sure all developers are going to assess their scenario, how much stock they still have in the market, what sales they have achieved in the Diwali period, and they will reorganize the offerings. So for those who can wait for 3 odd months, might get better deals after 3 months.
Anumeet, you mentioned that developers have been holding on to prices. How long do you think they can continue this?
Not too long, Vivek. Sales have already dropped by about 30 to 40% in the past few months. Also, the ongoing turmoil in the global economy will make it even more difficult for developers to raise funds. So developers who are already burdened by a cash crunch will face further heat.
So could we hope for a possible price correction around Diwali then?
That, Vivek, is too early to predict. It depends on the developers really. Prices will fall when developers cannot hold them any longer. So whether prices will fall around Diwali or post that is yet to be seen. So there's not much one can do right now except maybe wait till next month to see what this Diwali has in store. Vivek.
Right, Anumeet. So while you look forward to freebies and discounts on property, Priyanka is now here with me to tell us how to ease our EMI burden. Priyanka, you mentioned last week that one of the ways to ease the burden was to make a prepayment. But then this can involve a slightly large sum of money to put up on the table. As much as 19 lakh rupees on a 30 lakh rupee loan is one of the examples that you gave. So what's the other way out?
Yes, Vivek, the other option is to switch to a lower rate of interest. Some home loan providers like HDFC allow for it at the cost of a 5% fee on the original loan amount. So you could bring down your rate from about say 12% to about 11.75% with a 5% charge.
But what if I switch the bank itself? Do I escape this 5% charge?
That's correct. If you switch the bank itself, then also there is a charge levied of about 2% typically. In fact, experts say that if you have a loan for about 3 years and you have been, having a good record of paying your EMI, this is one option that you must look out for.
One of the things that is very specific to India is that new consumers typically pay less to enter the same bank than existing consumers. Thus, it is very likely that somebody who took a loan 3 years ago and has had an impeccable track record of payment is today paying 12.5%, 12.75%.
So keep a vigil on the rates. Even a 0.25% or a 0.75% cut in rates makes a lot of difference. Let's take an example. Supposing you are sitting on an outstanding loan amount of about 30 lakh rupees. At 12.75% interest, you would be paying a monthly EMI of about 35,495 rupees. But if you negotiate a little, bring your rate of interest down to about 12%, your monthly installments will be about 33,959 rupees, a difference of about 1,536 rupees in your monthly budget. Now you might think that that's nominal, but consider the time frame, 18 years. Annually you can save at about 18,432 rupees, and over 18 years your cost can be downsized by more than 3,30,000 rupees.
The irony is that in most cases, when you go back to your existing bank and tell them that you are switching because they are not giving you a good rate, in a significant majority of the cases, your existing lender himself will offer to reduce the rate for you.
I'll wrap up with another useful instrument in the market that is linked to the financer switching option, and that is the balance transfer and top-up option. Suppose you bought a property of about 30 lakh rupees and got finance of about 25 lakh rupees from Bank A 3 years back. Your current outstanding, say, is about 20 lakh rupees, and the property that you had bought has now appreciated after 3 years to about 50 lakh rupees in valuation in these 3 years. Now, in this instrument, Bank B will give you a loan of about 25 lakh rupees even when your outstanding is about 20 lakh rupees.
But why would they do that?
They would do that because they would base that loan sanction on the current value of your property.
Which is the 50 lakh rupees.
Which is
That's
the 50
the current
lakh
valuation.
rupees. That's right. On a 50% loan to value ratio, so you would get about 5 lakh rupees additionally.
And would this be at the normal rate at which I've entered the property?
This additional 5 lakh rupees you would get about 200 basis points higher, so that's about 14%. But if you had to take a personal loan, you would have to shell out about 20% interest.
Right, thanks very much for that, Priyanka. So if you're looking for a personal loan to make good the prepayment, instead of going and getting a fresh loan, see if you can make use of your existing home loan. You may even get it cheaper. Well, before we head for a break, let's see what made news this week.
The bitter battle between insurance companies and mutual fund houses has taken a dramatic turn. Beginning 1st of October, mutual fund houses like Reliance and Birla Sun Life will have to withdraw products like SIP Plus Insure and Century SIP, which combine systematic investment plans with an insurance cover. And this week at the Global Real Estate Institute Summit, banks and international investors say they're cautious of the Indian realty market. No investment plans coming forth in the next 6 months. Some even say valuations of distressed assets in the US can be stiff competition now to the Indian real estate market.
I'm going to get you a quick rate check across the residential sector of some major markets.